big event that's going to be that's going to dictate a market, whether it's a crop report, in this case, a presidential election. I've always, there is absolutely nothing wrong with evening up and taking a, look at this market with fresh eyes after we find out, because this is an unusual election because one of the candidates wants to fire Treasury and make some pretty substantive financial market changes. Most politicians don't even want to stick their toe in that in that area, right? They're more countdown, till election day. Forward markets are not pricing in any more disruption to interest rates. So right now we're looking. Right now, I think it is. We're just kind of trading the predicted polls, and right now, Trump is behind Harris, so that is probably less friendly for asset prices, but it's still almost within the margin of error. So the last thing I'll leave you with on this day last year, crude oil was at $84. Now it's at $68. That's dropped almost a quarter. I remember that was Ronald Reagan had one of the most timing-wise, blessed, lucky two-term presidencies, because I think the price of crude oil made its all-time high practically like on Inauguration Day in 1980, and then broke throughout the 80s, which is the greatest stimulus you can do for your economy is bringing energy prices down 23%. So it's kind of a golden one of those. We've seen them before, several times throughout. When I was starting my career throughout the 80s, markets were very suspicious of. I mean, the dollar was losing value, to other currencies, and commodities rallying, stock market making new highs. There were concerns that there was too much monetary stimulus there, but I don't know. And I don't know for how many years you want to fight this. That's a 26%, 44% are really strong years, and you're only paying for that with barely a tick up in the CPI and dodging any politicalization during an election year. I think monetary authorities are doing a good job.
Yeah, well, I think it's important for the listeners to understand that you can't actually spend less. So what the market is saying is, Janet Yellen, we don't believe that you're going to get the deficits down, that $2 trillion number, the $6 trillion number. We actually think you're going to get the rates down, the interest rates, because another way to make the payments affordable is make it cheaper to borrow the dollars, right? And then when you make it cheaper to borrow the dollars, you're obviously going to increase dollar liquidity. You're going to make assets get higher, like the get long, get paid. Bitcoin's going to go up, gold's going to go up, real estate's going to go up, stock market's going to go up. And that's actually going to increase their $4 trillion that they're collecting on us, because the biggest tax receipt that the United States collects is actually on capital gains. So as our assets go higher and we sell these assets to live our lives, obviously the US is making more taxes on us when our houses and our Bitcoins and everything.
There is a lot of potential consumer price inflation, and that you cannot address consumer price inflation once it gets going, and then it becomes self-perpetuating, right? If I know I'm looking at higher prices, I start building that into the way I operate my business. And once they get anywhere near double digits, you got your Paul Volcker problem, where you really got to do a lot of damage to the economy to restore confidence. So I totally agree with you. I'm just not seeing nothing's leaking into CPI right now. And where all the monetary stimulus is going, other than gold, does seem to going productively into, that's where you want it. I mean, if I got an over indebted economy that I don't want, that the way I can fix this is I can put double digit, on
for me to sit on my assets and just get ungodly wealthy from just doing nothing.
And but you got to be careful, because the political answer to that problem, to the wealth, to the growing wealth gap problem. The political answers only get worse, and you're hearing them during this cycle. Politicians are openly discussing raising the minimum wage and putting caps, putting price gouging, whatever that means, caps on commodity prices. Those are two of the worst political economic ideas. If that were the case, all I'd have to do is mandate, put me in charge, and all I'd have to do is pass a law that prices can't go any higher, and I would have solved inflation, right? But that's pay 2.5% more for groceries doesn't seem like a bad trade-off if you can soft landing your way out of this. That's, of course, never been done before.
I don't disagree with you. It cracks me up that on this podcast you find yourself defending Jerome Powell so much.
It cracks me up that at your age and your beginning of your career, I'm the optimist, and you're like, this place is gone to hell in a handbasket. And
No,
I don't
think I'm a pessimist. I think I'm just honest. That's just the truth. The truth is, I grow up with a lot of kids. Like, listen, I'm 30 years old. Oh, you want to know the truth? I'll tell you the truth. How many kids my age have assets? 0. And so what's the reality? The reality is their future is going to be inheriting
earn more fiat, despite my inability to like own assets. But yeah, if a politician's coming out and saying, "Oh, great, I'll raise minimum wage," that's yeah, obviously I'm going to vote for that person, right? Without understanding that the downside of raising minimum wage is that obviously prices are going to follow increasing as well. It's like it's like the home tax credit, right? It's like the home tax credit. Everyone's like, oh, if you give $25,000 to people to buy their first house, wouldn't that be amazing? And it's like, no, the people that own the houses are obviously just going to raise.
America held around 1/3 of the wealth in the country. The bottom 50%, so around half of America, only has around 2% of the wealth. So that's just the wealth distortion, the wealth gap. It's also important to know that around 95% of the wealth in America is held in assets, and only around 5% of the wealth in America is actually held in cash or cash equivalent. So a savings account, a checkings account, physical cash in your underwear drawer. And so you can tell that half the country is the one holding the actual cash, and the top of the country is the one that has all of the
just print whatever it was, $900 million, and mail it out to my voters and keep interest rates at 0%. Are how that follows what. Yeah, like I said, the most concerning thing to me, right, would be the spiking in asset prices. But I'm not sure I'd do anything about it either. There's been no downside consequences to it right now. And for Jack to talk about the people that are starting out in the job market and how
some new financial system that might take 50 years. I'm not saying we're going to be at a new financial system tomorrow, but are we in a debt spiral where it's just too far gone?
It's already. It might take 50 years, Jack. It's already taken 40, because that's exactly what people were saying during all the Reagan, twin deficits, budget deficit, trade deficit. Remember, Ronald Reagan famously said he's going to take Congress's cookie jar away. He said, I'm going to cut rate, which I think he inherited the top bracket, something like 70%. I'm going to cut it down to the 20s. Congress is not going to have all that revenue to spend, and they're going to have to curtail their spending. That, of course, didn't work out that way. He cut revenues, they kept spending, and we got monster deficits that everybody year in and year out said exactly what you're saying now. That math doesn't add up. It's going to have to manifest itself in some type of, typically price inflation or higher taxes down the road. Walter Mondale famously got up to a debate and announced that his intention to raise taxes. I think he carried one state. That's not going to happen.
But let me ask you this. Does it matter? I like, it's impossible to follow the job market right now. They adjusted the job data by 1 million jobs in hindsight. So I don't know. It's tough, right? Because you can't have short-term memory with these people. These guys said inflation was transitory. You remember that? And then it wasn't, and it was the worst inflation, or according to some metric, maybe within an 18-month time frame or something, it was like the worst American inflation in 50 years or something. And then he comes out and says It wasn't transitory. I'm really sorry about that. I messed that one up. Tell you what, I got a 2% target. I'm going to hit it for you guys. And he didn't hit it. So he says inflation is transitory. Don't worry about it. Then when we have to worry about it and it wasn't, he gave us a target and he didn't hit that either.
I'm sitting on my hands right now. I don't want to politicize anything. And like I said, I don't see any reason to. There's no stress on that board other than the price of gold.
Yeah, I mean, the takeaway is just the job that the Fed is in, there's no winning. They're going to come out and pretend.
We can all agree on that. Yeah.
Yeah. And so that's the takeaway is given their situation, has to get there. If there's feedback for us or for myself on how to explain it or what isn't resonating, please let us know. I'd be happy to cover it next week because we got to get people through the exit door to the best of our ability, because once this thing gets away from us, your friends and your family and your coworkers are going to be buying a $500,000 Bitcoin, not a $50,000 Bitcoin. And that's the asset inflation part. So it's always better today than tomorrow. And with that, we will talk to you guys next week. Carolina and play the Panthers next week. So, and then the Jaguars. So we've got a very realistic and practical chance to be a 4-2 Chicago Bear team. And we got to just take it 1 week at a time with this squad.
I don't know. Have you been? It sounded pretty loud on TV. Have you been to Soldier Field?
Yeah. I was at the opening week. It was loud. I mean, this city wants nothing more than the Bears to be good. I truly think if this city could ask for one thing of anything, it would be a Super Bowl, but for the Chicago Bears. So we want it, but unfortunately that doesn't matter. Doesn't matter how much we want it. Just like it doesn't matter how much you want more Bitcoin. There'll never be another. It doesn't matter